ROC businesses wish to invest in industrial parks in Longan. Businesses of the Republic of Korea, ROC, expressed their desire to invest in an industrial park in Longan province during their meeting with the provincial leadership on March 3. They also expected to establish a service support center for foreign enterprises in the locality to create favorable conditions for businesses during their operation. They proposed that the authorities support ROC experts and engineers in applying for entry visas and residence permits, as well as assisting them with tax procedures and land acquisition. Local authorities welcomed Korean businesses' proposals and said they would direct relevant agencies to consider and address their queries. At the meeting, a chapter of the Korean Chamber of Commerce and Industry, KOCHIM, made its debut in Longan province to provide support and consultancy for ROC businesses operating in Vietnam and in Longan in particular. The ROC is currently the second largest investor among nearly 40 countries and territories investing in Longan with a total registered capital of almost $900 million United States dollars.
Foreign firms keen to seek space for flagship stores in HCM City. Despite the negative impact of COVID-19, several major retail groups have quietly brought in new international brands to Vietnam this year, with priority being given to large-scale stores situated in prime locations in the center of Ho Chi Minh City. Tran Pham Phuong Kien, manager of retail leasing at Seville's HCMC, revealed that although many international brands have been interested in the Vietnamese market since 2019, their expansion plans were delayed due to the COVID-19 pandemic. However, these brands are in the process of restarting their strategies after international flights have resumed in the nation this year, Kien said. These new brands have often placed high requirements in terms of location, area, display capacity, and brand recognition for their flagship stores when entering the Vietnamese market. In fact, several popular names such as Uniqlo, Muji, The Joy De Dong, and Con Kung have also made a presence within the domestic market by launching points of sales covering an area of thousands of square meters in Ho Chi Minh City. Notably, multi-brand store models boasting an area of between 350 and 1,000 square meters are expected to expand moving forward thanks to diversification of goods and prices, she added. The Seville's expert, however, emphasized that the large-scale retail model will create burdens in terms of rental prices, investment costs, and capital to purchase goods. She advised foreign businesses to carefully study the market and consumption potential before making decisions to launch flagship stores. According to February's report released by Seville's Asia Pacific, both Vietnam and China are the two countries enjoying the fastest recovering retail market in major cities. This comes after CBRE Vietnam forecast that the retail market in the southern metropolis is expected to see robust growth by the end of this year, a factor that would duly push the rental price to recover moving into the second half of the year. Real estate and investment management services firm Jones Lang LaSalle, JLL, also expressed its hope for the improvement of the Ho Chi Minh City market this year. Due to new supply sources and the demand for recovery following the COVID-19 pandemic, rental rates are expected to increase by $90 per square meter each month in the southern city's center, with this price being $37 per square meter on the outskirts of the city later this year, according to JLL. JLL anticipates that Hanoi's rental space market will bounce back as it receives roughly 73,454 square meters of space from projects outside the city center, along with expansion activities being carried out by big brands.
Businesses advised to utilize FTAs to enhance export resilience. Local businesses have been recommended to seek new markets and innovations into new products through global value chains, GVCs, whilst making use of existing free trade agreements, FTAs, to strengthen export resilience, according to the World Bank, WB's March Vietnam Macro Monitoring. The report outlines that new COVID-19 cases surged during the reviewed period, reaching over 100,000 cases per day in the second half of February following the Tet holiday, causing major mobility indicators to fall. Available data suggests the continued recovery of domestic economic activities, with industrial production growing by 8.5% annually and retail sales up 3.1% on year. Although the effects of the recent surge in COVID-19 infections on labor supply, production, and consumption may not have been fully captured. Furthermore, the merchandise trade balance deteriorated from a surplus of $1.4 billion in January to a deficit of $2 billion in February, with imports growing at a much faster rate than exports. The country attracted $2.9 billion in FDI commitments in February, a figure 15.9% lower than a year ago. The majority of the commitments were made by existing firms intent on expanding their production facilities, including two sizable projects in real estate and electronics, each worth more than $900 million. The disbursement of approved FDI projects also increased by 7.9% on year in February, a third consecutive month of increases. Despite rising energy prices, CPI inflation remained subdued thanks to relatively stable food prices coupled with weak domestic demand. Credit demand remained strong after the Lunar New Year period, serving to keep the overnight interbank interest rate at 2.56% at the end of February, compared to less than 1% at the end of 2021. Elsewhere, the budget balance recorded a $1.1 billion surplus in February as revenue performance remained strong. Indeed, expenditures increased thanks to improved disbursement of public investment. While the economy continues to show resilience and is in the process of recovering, downside risks have heightened as cases of the Omicron variant continue to sweep the country, and the Russia-Ukraine conflict has increased uncertainty about global economic recovery, thereby creating new strains on global supply chains and raising inflationary pressures. Commodity prices have also risen sharply and may rise even further in the short term, with the continued administration of vaccine boosters and renewed health guidance being critical to manage future waves of COVID-19. WB experts emphasize the need to keep track of domestic price developments, adding that the reduction of environmental protection tax would not be the right policy to provide relief for rising oil prices.
Thank you for watching the newsletter, and don't forget to subscribe to the channel.